I'm Jill Noonan, the Senior Content Director of The Real Deal, and we're here today to talk about our latest cover story, headlined Billionaire Backlash, with the two reporters who worked on it, E.B. Salamont and Will Parker. The seed for this piece was planted in early November when about 30 high-profile Saudi business executives were rounded up in Riyadh and detained. But there are a number of other major global events that have shaken investors in the last 12 months. E.B., I'll start with you. Can you give us the general overarching take on what's gone on globally in the last 12 months for investors and why it all matters?
Well, I'll start with why it matters, and the answer to that is that, the investment world today, certainly in New York real estate, but everywhere really, is that, we're in a global economy. Investment is coming from everywhere and anywhere. So over the past 12 months, or maybe even a little longer, what you've seen is different regions of the world experiencing problems very unique to them and to those investors. But that's just kind of the tip of the iceberg. In Russia, for the past few years, investors there have been dealing with sanctions from the U.S. And then, of course, the latest probe, the political probe in terms of whether there was collusion possibly with the U.S. presidential election, that's just kind of magnified the scrutiny of investors there. Meanwhile, in China, Chinese investors for more than a year have been hamstrung by capital controls that have really sharply curtailed their ability to invest overseas.
How do you think this has sort of played out in terms of deal volume in the Manhattan market?
There's no specific cause and effect, but in general, with all of the scrutiny, with turmoil at home, investors have two choices. They can try to get their money out, or they might feel stuck that, they're under scrutiny, they can't move their money out.
And it does seem like one of the big themes that's emerged from this piece is that just like restrictions on capital and like changes in the flow of capital globally.
Absolutely, and in some cases that's very specific and that's by design, such as China.
Well, I'm going to turn to you to talk about Saudi Arabia. At first blush, the Saudi story really seems like a global political story, but can you talk a little bit about who was arrested and why it matters to real estate?
So among those arrested in Crown Prince Mohammed bin Salman's so-called anti-corruption campaign were a number of those who made their fortunes, at least initially, in real estate and construction. That includes Mohammed al-Moudi, who's an Ethiopian-born billionaire in Saudi Arabia. It also includes Bakr bin Laden of the Saudi bin Laden Group, large construction firm. And probably most notably, especially in the U.S., is it included Al-Walid bin Talal, whose investments include things like Lyft and Citigroup. And in real estate, it includes ownership in the Four Seasons hotel chain, as well as a stake in the Plaza Hotel in New York. So what's been said is that the Saudi government is going after their personal assets. So for bin Talal, that could be many things. He has a company, Kingdom Holdings, which technically holds the real estate, but it's not entirely clear what the Saudi government will do to any of bin Talal's holdings. Generally speaking, they're trying to get at least $100 billion out of those who've been detained, more or less in return for their freedom.
One thing that I thought was interesting is you talked to a source that said that his assets are currently frozen. So it seems like at the very least he's just sidelined from future investments, even if his current investments aren't going to be liquidated. Can you talk more sort of broadly about how important Saudi investment is in New York real estate and what kind of money we're talking about?
So it's difficult to know exactly. Some data we looked at showed that over $20 billion in direct, transparent real estate investment came from Middle Eastern nations to American commercial real estate. Only about 6% of that was from Saudi Arabia, but the problem is that data only tracks the names of companies that we could publicly see purchase real estate.
Are Saudis starting to pull back? I know that one interesting thing in the piece was, I think you quoted a source saying that they were planning a $1 billion investment in Credit Suisse, and that is no longer on the table, at least for the time being.
Yeah, so some reports, I believe, in the Financial Times had indicated that planned investment in Credit Suisse was not going to go through until the Crown Prince had sorted out the rest of what he plans to do with the detainees and how much money they're taking from them, et cetera.
Is there any evidence to suggest that other Saudi companies will be impacted by the shakeout?
Sure. I mean, there's one company I think we wrote about in the piece that it's not clear if they're affected or not is the Oloyan Group, which is a very large Saudi investment firm, has interest in everything from fast food to airlines. Made a very well publicized real estate buy in Manhattan last year when it bought the Sony building for $1.4 billion. They had an IPO planned. The first time they were going to sell shares in their company in more than a decade. That was delayed. The announcement of that delay was just days after the roundup of princes and executives. They said that that delay was planned before, but it's not clear, if what happened in Saudi Arabia had any effect on it or not.
Will, you talked to some sources that were saying that politically connected families will definitely trying to start getting their money out of Saudi Arabia now. Can you talk a little bit about what that is all about?
Right, I heard this from a number of people. One of them was a former executive director for the IMF for Saudi Arabia, and he was saying, it's not that the whole country is on lockdown. Most Saudi money can get that money out of the country if they want to. It's open and available, but for how long? That's the question.
Which could mean sort of more investment in New York on the flip side of this whole conversation.
Absolutely.
And actually that seems to be sort of a theme that carries over into what's going on in China right now, because people with capital controls, I guess the politically connected, are still trying to get their money out. E.B., you've covered this topic extensively. What's the latest with the detainments and the capital controls right now in China? It seems like there's another wave going on.
So on the one hand, you have executives and the heads of some of the most active investors detained. But on the other hand, just this past fall, the Communist Party had its 19th Congress. That's a meeting of party leaders where they set forth the agenda for the next 5 years. And at that meeting, the party basically anointed new leadership. One big caveat is that a lot of these major companies, if they're listed in Hong Kong, if they already have assets overseas, they can move money. So it's not as if they don't already have workarounds, but the existence of the regulations and just the possibility that executives can be detained or questioned, that's a very harsh reality.
Right, because
still.
you have a company like H&A who obviously does have their money invested here, but they're being targeted right now. I thought that the CEO's comments were really astounding. Bloomberg quoted him saying, "If some sectors are now restricted by the government, I will consider selling assets I bought in these sectors. We will not be investing in anything the government does not support." Now, H&A just bought 245 Park Avenue in the biggest investment sales deal of 2017. So, I mean, that's a pretty astounding statement that they may be liquidating that. They're also invested, I think, in the Spiral and Hudson Yards, the Wheeler project in Brooklyn, and many others in New York.
So it's unclear which asset classes the government's going to target. In the past, it's been entertainment. That scuttled some deals for Dolly and Wanda. But in the case of H&A, it's really curious because they've been a huge player, a massive investor, making, as you said, the biggest iSales deal of 2017, at least so far. And now they may liquidate, or they may not. No one really knows. And that's a really big deal. They have about $100 billion worth of debt. Their credit's been written down by some of the ratings agencies, and they basically were reassuring investors, like, don't freak out, it's going to be okay.
Will, how does the Paradise Papers fit into this sort of flow of capitals issue, and what did Bono have to do with it?
So Bono, it turns out, is a real estate investor, and an investor in Lithuania, of all places, where he owns a small stake in a shopping mall. Bono is a member of a Malta-based company where there's very favorable tax regime there that invested in the shopping mall some years ago, and that's how he ended up in this massive leak. Although many say it was actually a hack of offshore information from this firm Appleby in Bermuda.
And so this entity that he was involved with sort of shifted their location to various spots that had very favorable tax structures.
Right, they started out in Malta, which had something like a 5% corporate tax, and then moved it to Guernsey, which then, in one of the Channel Islands, which I think had a 0% corporate tax.
So what does all of this mean for real estate? It seems like, the main thing going on here is sort of entering this new level of transparency.
The biggest transparency, or I guess exposure concern that most people we talked with talked about, which was that limited partners in these funds that are small names, they're not big names, People are worried eventually all of their investments are going to be exposed one day through these leaks, that people who have a small investment here, a small investment there, their entire portfolio is going to be exposed because these hacks and leaks become more common, and they're worried about that.
Tell us a little bit about how Blackstone fits into all of this and what we learned about Blackstone through this leak.
So Blackstone's connection to the Paradise Papers comes from investments in the United Kingdom. They used entities through Luxembourg, which is a very popular tax shelter for investments in Europe and elsewhere, to buy commercial properties. And the documents that leaked were their correspondences with two accountancy firms with which it went through a long process of trying to figure out the best way to structure these deals in order to pay the lowest possible tax, which meant avoiding as much of the UK tax as possible and making the investment favorable for the Luxembourg side, where, of course, there's very low tax.
I thought it was interesting that you talked to someone for the piece that was saying, like, this would not dissuade me from investing with Blackstone at all. In fact, it would have the absolute opposite impact because they're obviously, figuring out the lowest possible cost basis to get into these deals.
Yeah, I mean, if you're a millionaire fund investor investing with Blackstone, ultimately you want Blackstone to pay as little tax as possible. So that was really not a surprise to hear that from, the investment.
Like I said earlier, this was like a macro story. It's not necessarily on the minds of like every broker in New York City. What were some of the challenges that you guys faced in reporting this?
I think what was challenging about this story and reporting this story was putting the pieces together. We had ample sources who could speak about one particular region or genre of investor, but we basically had to ask our sources to be a little bit more introspective than they might have otherwise been and to take that 30,000-foot view with us. I think once they did, they sort of shared our sense that there was so much global turmoil and maybe they weren't all interconnected, in those countries, but that in New York they were having one impact.